Hello and welcome to the latest edition of the Elevate podcast from 27tec. Today we're going to be discussing foreign currency exchange, how it works for advisors, and the benefits it can bring to you and your clients. I'm delighted to be joined today by Kieran Horgan from Smart Currency Exchange. Welcome to the show, Kieran.
Thanks, Sam. Yeah, great to be here, meet everyone, especially the office dog, Jesse.
Fantastic. Before we get started, I just want to give you a quick exclusive gift from 27tec. Now, this is a rare one that only gets given to our podcast guests. It's your very own 27tec water bottle.
Thank you very much.
You're welcome.
Keep that, put that in the shot.
Okay, Kieran, to get started, would you like to give us a quick introduction of yourself? Tell us a bit perhaps about Smart Currency Exchange, what you do, and how you guys help advisors.
Yeah, absolutely. So, a bit of background on myself. I've been at Smart Currency for about 6 years. So I used to be one of the FX traders, so dealing directly with the clients. But since then, I've moved off into a bit more of a strategic role where I was kind of building and developing our client referral systems. So getting people to spread kind of positive word about us and get some networking to happen through our client database. And now my focus primarily is on business development. So working with key partners like 27tec. And my focus primarily is in the UK mortgage industry. So we are looking to really support people who are bringing funds into the UK for UK mortgage deposits, essentially. Smart Currency is quite a broad business, though. We help individuals, as I've just described. We also help businesses, anyone who needs to make an international currency transfer and manage their risk effectively. That's what we help them do.
Fantastic, thank you. So if we were to look from let's say from a mortgage perspective, whereabouts do you guys fit within that journey, that overall kind of journey for the client with the advisor?
Yeah, so with UK mortgages, we tend to get referrals from mortgage brokers pretty much at the first instance where they realise that there's going to be a foreign exchange transaction involved. So this will be kind of during the initial fact find. Quite often, like it will be a client that is maybe moving funds into the UK from a gift from mum and dad, for example, or maybe they've been themselves based overseas previously and have savings over there, or maybe selling a property and buying in the UK. So it's really at that initial fact find, the mortgage broker will refer them to us, and then we will work with the client to bring the funds into the UK for that mortgage deposit and make sure that they're getting the best value possible from the market and are protected critically from currency exchange risk.
Brilliant. I can imagine with the way of sort of globalization, that's happening more and more often, where we have international buyers looking to purchase properties within the UK and again, vice versa. Are you seeing an increase in the level of business you're getting?
Yeah, absolutely. I mean, the movement into the UK at the moment is as strong as ever. We work with people from all over the world, from Asia through to South America, everything like that, bringing their funds and, bringing their family over to the UK and ultimately looking to settle down here. And equally, we see quite a lot of movement the opposite direction. So people who are perhaps leaving the UK to go to sunnier ventures in wherever they might like in Spain or something like that, and we help those people as well. So any direction we're able to help them with that currency transaction that will be involved.
Fantastic. So we're talking about sort of currency exchange rates. Now, is that not something that can be handled by a bank traditionally? And if so, why would someone not just use a bank, or an advisor not use a bank? Why would they prefer to use a currency exchange service like yourselves?
Yeah, so I mean, if you're an individual, I think for the majority of people, their first thought would be, I need to move funds from one country to another. I'm just going to make that transfer through my bank. What people don't realise is that the banks ultimately have quite a lot of fees involved in doing that. So, to anyone listening, I would say go and have an explore now. Go and see what happens when you move, say, £100 from one currency to another using your bank. See how much actually comes out of that from the exchange, if you like. It can be quite sizable. So for anyone looking to do a large international transfer for a mortgage or a property purchase, or as I said, businesses as well, they tend to want to come and use a specialist like Smart Currency because we're going to be able to get you far better value from the market. And that's before we even talk about people who are exposed to currency risk. And so that's something that will arise when people are needing to make a transaction that takes place over an extended period of time. Again, very much the case for a property purchase or a mortgage process. And that's just something that the bank cannot help people with. So that's really what we're there for. If you want to make a transaction now on the spot, we can get you better value. If you want to make a slightly more complex transaction around a property purchase, you're going to want to have your risk managed, and that's where we come in.
So there's a clear reason why a client might want to use a currency exchange service like yours. In terms of what's happening right now, though, if we're thinking, say, geopolitical tensions, what we might term black swan events, those unpredictable events that can have really quite wide-ranging impacts across the world. So let's say, for example, we have the war in Ukraine, and more recently, so the conflict in Iran. That's impacting oil prices. It's in turn impacting interest rates, which of course then impacts house prices and mortgages. From that perspective, how does that sort of translate into the real risk then? If you can kind of break that down a bit for us so we can see where that sort of those bigger scale events can turn into pain for clients who aren't then prepared with currency exchange.
Yeah, exactly. I think it's very natural for everybody to have kind of a bias towards thinking that things are going to remain the same. And that can be really dangerous when it comes to currency markets. So, you talk about black swan events. It seems like we're seeing more and more black swans than ever at the moment.
Of them.
Yeah, a flock of black swans, exactly. So we've got, Iran at the moment. We've got unrest in Israel, Palestine. Who knows what Trump's going to do from one day to the next. And then, of course, all of the upheaval around what is the future for things like AI and convergence of technologies. So all of these things create so much uncertainty in the market at large. And of course, there are going to be winners and losers for that on the currency scale as well. And so, yeah, the shifts that we've seen over the last, say, 12 months, I mean, the US dollar has fallen over 10% in 12 months. That's really hurt a lot of people holding US dollars, which is obviously the biggest currency in the world. And yeah, we're continuing to see a lot of uncertainty about the future of sterling as well. Where is it going to be? We used to be a very, very strong currency, the world's strongest currency, and now really we're in the kind of mid market. So all of that plays into the fact that people need more so than ever to understand their options when it comes to transferring money internationally. Because if we were not on top of it and they are larger transactions, people can lose thousands very, very quickly. And it's just not something that I think people are aware of.
Absolutely. So that risk is sort of ever present, as we said, with, you never know what's going to happen next. So from that perspective, if we're talking about risk, is using a currency exchange service like yours, is it about removing risk entirely, or is it more about mitigation? How would you position it there?
Yeah, it's a really good question. And I think we can essentially take the approach that the client wants us to take.
Yeah.
So the majority of clients that are taking on larger purchases like property or going through a mortgage process, which of course is most relevant for this podcast, you will find that 90% or plus of people, once they understand currency risk, will want to remove it. Okay, people are not buying a property to speculate on currency markets. They're buying a home for their family or whatever it might be. Okay, so most people will want to remove the risk when they understand that it's there. And that's, again, where we come in versus the bank. The bank will not be able to remove that currency risk. They won't be able to fix exchange rates and give people that certainty. That said, if people do want to take risk, we absolutely can go through that journey with them as well. And so we have various products, things like order to buys, where people could even target rates that are better than the market currently, and essentially have an order fulfill if and when that rate is achievable. As I said, it's not something that most people want to do because the risk is generally the thing we want to remove on larger purchases, but we can do it if people want it.
Absolutely. And my understanding is you've recently conducted a survey of about 5,000 people. And within that, am I correct in thinking over 95% of them, once they understand the level of risk involved with foreign exchange, they will actually expect and want their advisor to be supporting them in that case. Is that right?
That's absolutely right. And yeah, this was a really interesting survey. So just to give a bit of background on this. So we surveyed 5,000 of our UK mortgage clients after they had gone through the mortgage process. So, we spoke earlier about how this foreign currency exchange and exposure to foreign currency risk is often something that people aren't even aware of at the client level and at the broker level. But once people have gone through the journey and they've actually made the foreign exchange transaction, or they have been exposed to risk and they've seen the exchange rates that have actually moved underneath them as they've gone through this process and potentially lost out, once they've gone through all of that and they are now educated, 95% of them have said that they expect their mortgage broker to make a recommendation of how to approach the foreign exchange part of the mortgage. And what really that recommendation can look like is simply a referral through to Smart Currency Exchange, who will basically handle the rest of it. So sure. That's really, we were quite surprised at how many people said that. 95% is quite a...
Hindsight's a wonderful thing, right?
Yeah, exactly.
Absolutely. So in that case then, overwhelmingly people agree this is something that they would want to be informed about or have their advisor talk them through. So why aren't clients raising it themselves? Is it just not a consideration for the client at the time? Do they just assume that perhaps I go to the bank sorts this for me? Are they just not maybe aware of these services?
It's the awareness, it's the educational piece. As we said at the start, people, I think everybody defaults to think I'm just going to use my bank. And people definitely don't come in with this concept in their mind that they're going to be exposed to currency fluctuations. They just think that it's going to be the rate on the day. And it's just simply not the case. So it's awareness from the client. The client is not going to ask you. That's kind of a message to the mortgage brokers out there listening to this. Your client is not going to ask you about foreign exchange risk because they don't know about it. So this is an educational piece for the mortgage brokers to understand that this is a part of the mortgage process when somebody is bringing funds into the UK from a gift from family, from their previous savings overseas, whatever it might be, they are going to be exposed to it. It is a part of that journey. And ultimately, the mortgage brokers can be the one that provides the solution to that.
So it's sort of fair to say that this is very much a tool that really needs to be in every advisor's toolbox, something they can pull out when they need to, or at least be cognizant of it for every single client interaction. Is this going to be applicable, and how do I best guide that client through? Absolutely.
Yeah, I mean, every client interaction where there is foreign exchange involved. Yeah, I mean, it's ultimately, it's very common for mortgage brokers to sometimes partner with solicitors or conveyancers and things like that. It should be seen as another kind of tool for the client as and where it is appropriate. But yeah, where there is foreign exchange involved, that's where it comes in. I mean, from the mortgage brokers that we work with currently, obviously there is a range, but I'd say it's probably averaging about 20%. So 1 in 5 cases, there is some form of foreign exchange involved. So that's a very kind of rough estimate. As I said, with some firms, it's upwards of 50% where they have an international specialization. With others, it's more like 10%. But on average, 1 in 5 cases we're seeing have some form of foreign exchange involved.
That's considerable. I didn't think it'd be that high. So that's a considerable opportunity, especially as things get more competitive in the advisor landscape. This is really something you want to be able to have within your, as I say, within your toolkit.
Absolutely. I mean, it's a differentiating point, right? I mean, this is, I'd imagine for a lot of the people listening, this might be the first time foreign exchange really has been kind of considered as part of the mortgage process. What that, of course, means is that, ultimately, the client journey and the customer service element can be improved by inserting that into your client journey, essentially. And differentiating yourself from other brokers that perhaps aren't aware of this and are leaving their clients exposed and leaving them to kind of sort out this part of the process for themselves and not being given that solution.
course, absolutely. So we're seeing headlines driving quite sharp movements in interest rates and fluctuations in the currency markets. How do exchange rates actually impact someone buying property in the UK in real time?
Yeah, I mean, I think the best way to answer this is with just talking about a fairly recent example that we had. The client in question was referred to us by one of our mortgage broking partners. They were referred to us pretty much at the point of their sale going through in the UK. It was a sizable purchase for about £2 million, and they were putting £1 million deposit down, so borrowing the other million. All of their funding was held in the US in a US stocks and shares portfolio. We got referred that client, as I said, at that point where they were about to complete. What had actually happened, though, in the 4 or 5 months preceding that was that the value of the US dollar had pretty much plummeted by over 10% versus the value of the pound. And that was linked to some things to do with Trump's tariffs at the time. This is back in kind of mid-2025. So the reality for that client was that they had no options. They had to complete on their purchase. They had to complete on their mortgage. They had to make that transaction and ultimately take that loss. They had known that they were going to do that property purchase and complete on that mortgage back in March. And that is normally when a mortgage broker would refer a client to us at that point where we know there's FX involved. And had we had that conversation, we would have likely given the client some guidance. One of the most common things that we will do with the client is get a forward contract in place, which essentially allows them to secure the exchange rate.
I see.
And he could have secured the exchange rate back in March for his completion in July. It would have saved him £100,000 essentially.
And peace of mind as well.
And peace of mind, yeah. We spoke to the client and he was basically watching the exchange rate slip in front of his eyes for 4 or 5 months. It would ultimately that's a painful example, one where a client came to us too late. It wasn't the effect of foreign exchange and the process involved wasn't understood by the client or the broker in that sense. Ultimately the client lost out quite significantly from that. It can really put the broker's cases at risk as well. I mean, in this particular example, the client was able to complete no problem despite the extra 100,000 they now had to pay due to the exchange rate fluctuation. But I've seen other more extreme instances where people don't have that extra 10% that they've just lost, and ultimately they default on the mortgage and the property purchase. So it can end up getting quite messy if people aren't on top of this, and that's really where we come in to support the clients.
I see. You mentioned there, obviously, the crux of that kind of case was the fact that currency exchange hadn't been considered early enough in the process. Would I be correct in saying that the earlier the better, or is there a specific part within the journey, within the property purchase journey, that you guys should be getting involved with currency exchange?
Yeah, so I mean, we're happy to speak to anyone at any time, and so I would always say, if you're in doubt, get in touch early, because if you're not at that point where you're actually ready to commit to securing an exchange rate, that's absolutely fine, and we can just start to share some helpful information with you. We send out weekly currency updates, things like that, so that people can start to understand the risk. But where it becomes absolutely critical is where people are starting to seriously go down a journey where they're getting a mortgage application in, they're maybe seriously looking at property or even have an offering on a property. You absolutely want to have spoken to us by that point. But yeah, there's no time that's too early. If it is, then we'll just kind of keep in touch through those kind of light emails.
Just don't leave it too late.
Exactly. The later you leave it, the less options you're going to have to take control of your mortgage process.
And we know with the way things are at the moment, with global economy and various situations around the world, things can change just like that. So it's better, it pays to be prepared as possible.
Well, this is it, right? I mean, things change by multiple percentage points overnight at the moment. And so, for somebody, say, moving even £100,000, it's not uncommon for that to move by several £1,000s overnight. where there's a big currency, something that affects currency. So you need to be understanding it, and you need to make sure you've got it taken care of.
Absolutely. So this is paramount for affordability when it comes to your clients.
Yeah.
So you're integrated directly within 27tec's platform. How does that work for advisors, and how do they sort of use it within practice?
Yeah, that's right. So we are you've got a fact find within the platform, and there's a question within that fact find that simply asks, is any or all of the mortgage deposit being funded by a foreign currency? And where the answer is yes, our logo will appear in the top right of the screen. Okay, and that's got a very short referral form where you can essentially input some key information about the client and send them over to us to get in contact with them. So it's really takes it all of kind of 30 seconds to use, and then we will take it from there essentially and keep the brokers updated on progress.
Fantastic. So super minimal sort of addition to workload. It's not a case of jumping out into extra systems. It's really sort of there and available to use.
Exactly. I mean, I think it's just about people knowing that it's there firstly, and then kind of getting it into the habit of, okay, this is something that the client is going to need. I need to just complete this short form and get it over.
Of course. And for advisors, I would say it's obviously very important for those guys to have sort of complete control and understanding and knowledge of what's happening along that entire process. So once an advisor has made that referral to you, how do you keep them informed in the process and ensure that they are sort of aware of everything that's happening within what you do?
Yeah, absolutely. So, I mean, you submit the referral. And it's a good point to note that on that referral form as well, there's the option to actually schedule a time and date for us to call the underlying client. So that can be agreed between the broker and their client, which again is a really nice touch, makes the whole thing a little bit more formal, means that we're not kind of chasing the client. And as a nice stat on that as well, we actually investigated this quite thoroughly. Where we have a time and date to call a client, we will get through to them 1 in every 1.6 calls. If we don't have a time and date, we will get through to that client every 1 in 6 calls.
Wow.
So, yeah, it means that we're not going to be having to call this client multiple times, and it's just going to be a much better experience for them, and obviously improve conversions of these into trading clients. Once the referral is submitted to us, we will get on the phone to that client, understand their requirement, and where we can help them, they will then go through a very simple onboarding process to set up an account with us. At that account opening stage, we will notify the broker, so they'll know that that's been set up, and then we will go through the usual account management pieces with the client, where we're taking them through exactly what their options are for currency exchange. The broker again will be notified when they have completed their trade with us, and we can kind of be in communication about where the funds are going to be coming in from, if that's helpful in terms of like the audit trail and things like that.
Okay. And how long, also how quickly can those transfers take place? So once we've referred the client to you, we've organized the funding, how quickly can that happen? Because of course for advisors and their clients, with the way things change so rapidly with product changes, as we've seen quite a lot at the moment, loads of lenders are having to change products to suit the new interest rates. Naturally, an advisor and their client is going to want to keep that time frame as tight as possible so it doesn't impact the overall process. So how quickly can you guys release funds in this case?
Yeah, so I mean, from the point of referral, when it's a UK-based client, they'll often pass our KYC checks and have an account with us within minutes, and then we can book a trade again within minutes, and we can often perform a transaction same day, next day if it's after, say, like 2-3 p.m., just based on the banks being able to process. So the whole thing can be very, very quick where it needs to be. But as I touched on earlier, the way that we want to go about doing this is getting those referrals early from the broker, maybe a few months away from when they're actually going to absolutely need to make this transaction, and then we know everybody's much more relaxed in terms of the timeframes, and we can actually work with the client to maximize the outcome from the market.
Got you. So one other thing I'd like to touch on here as well is we talked about sort of the speed and the efficiency side of things, but considering the amounts of money involved, these are often people's largest purchases they'll make in their lives. So how are you protecting the funds here? How are you sort of ensuring the safety of those funds, especially with markets being as sort of volatile as they are? How do you provide that safety?
Yeah, it's a really good question. So, I mean, we're one of the most established private client businesses in the foreign exchange industry in the UK. So we've been around since 2004, so just over 20 years now. All of the money all of the client funds that are held with us are held in something called a segregated client account. Now, what that means is that it's always in the client's name. So if anything were to happen to smart currency, it's never our money. That is totally ring fenced, and that's held generally within a Barclays account within the UK. That said, we've got a very healthy balance sheet. We're not going to be going anywhere anytime soon. So yeah, in terms of assurances, we're one of the safest people to be using, and of course, fully authorised and regulated by the Financial Conduct Authority in the UK.
Good to know. Thank you. So there's loads of great benefits there for the client side of things. But if we're talking about the brokers and the advisors, what are the advantages for them?
Yeah, it's a really good question. So, I mean, as we've discussed, obviously, from the client's point of view, it is all about getting the maximum value from the market and removing that risk. Of course, because of that advantage to the client, that kind of follows on right to the broker in that they're going to be offering an enhanced level of customer service. They're going to be offering a more comprehensive service by getting foreign exchange covered as part of that mortgage process. Something often that mortgage brokers are missing. And so, yeah, again, differentiating themselves from other mortgage broker competition. It can also be a significant additional revenue stream for brokers. So we pay commission on these referrals. I can tell you that the average commission that we paid per successful referral in 2025 was £625 per case.
Wow.
So yeah, so I've spoken to quite a few of my mortgage broker partners, and it's where there is foreign exchange involved, it's essentially more than doubling their revenue per case that we're successful in kind of trading that client. So you only need to be having a handful of cases like this a year, and it's starting to be really quite sizable in terms of what you're going to receive monetarily, and that's before you even get into those other benefits, like I said, about customer care, and really kind of the due diligence around having international transfers involved in the mortgage process.
So we mentioned earlier about potentially up to 20% of cases actually requiring some form of international financing. What do those clients look like? Where are they coming from? And we know they're international, but are there any sort of particular characteristics that advisors will be looking for here when they're seeking that business, or who they might recognize coming in?
Yeah, I mean, I tend to, mortgage broker to mortgage broker, it's very common for these guys to perhaps work with like a specific group of people or a specific country. So, I've got people who are working with a lot of people coming in from India or from Australia or from America, and they tend to have those specializations. And so if you're a mortgage broker listening, are you one of those that tends to work with a particular country? But it really, from my perspective, obviously we work with hundreds now of mortgage brokers. It is a real range of people coming into the UK, but in terms of the requirement itself, one of the most, if not the most common example is where people are receiving a gift from mum and dad who are overseas. That is probably the number one. And then, probably joint second are things like people who've lived overseas or grown up overseas themselves, have savings over there, people who've got international income, people who've sold an overseas property are receiving kind of share options or realizing investments overseas and bringing them back to the UK. Those are kind of the main things we see.
So that's quite a huge sort of amount of people, really, isn't
Yeah.
there? There's a lot of opportunity there. And are you then seeing sort of a real increase in the demand for these services because of that? And is that demand potentially being impacted in a positive way by the volatility, i.e. people are seeing the need to have these kinds of services to provide that safety, that reassurance and that risk mitigation?
Well, yeah, that's right. I mean, as we said earlier, I mean, to an extent, a lot of people aren't educated and they're actually not aware of these risks until their mortgage broker or one of our other partners kind of introduces them to us. So I think, generally speaking, a lot of people do need that kind of introduction from the broker and for them to get it as a concept that needs to be considered. But yeah, once they are aware of it, as that kind of survey point illustrated, 95% of people expect that to be covered once they do understand it. Yeah, I mean, people tend to kind of continue using our services after the mortgage process because they can see the value and they can see the risks that are involved in terms of making international transfers. So yeah, it keeps us busy for sure.
It's good to hear. We talked a lot about then international buyers, so overseas buyers who are bringing their money into the UK to purchase UK property. Would I be right in assuming that it also works the other way here with your services and with other currency exchange services, where it could be UK based individuals who are then looking to move money overseas and purchase property overseas to the UK?
Yeah, that's absolutely right. And so again, perhaps for the listeners of this podcast, things like remortgages would be really relevant. So we see a lot of people remortgaging UK property to free up funds to buy, that dream holiday home over in wherever it might be, Marbella or Ibiza. That would be nice, wouldn't it?
It would.
But yeah, so we can absolutely do both directions. To be honest, our largest partner set are kind of international estate agents, so estate agents based in France, Spain, Italy, whatever it might be, and helping people from the UK move their funds over there to buy a holiday home or actually move over there for good.
Fantastic. So if we were to kind of then summarize, if there's one thing that advisors should be doing right now to better support their clients when it comes to foreign currency exchange or moving money internationally, what would that be?
Yeah, so I think at the mortgage advisor level, what they need to do is actually quite simple, and it's two things. One, they need to be aware of the risk and be able to identify it with their clients, and that is as simple as asking the question: will any of the funding for this deposit come from a foreign currency? So it's about understanding and identifying, and then the second thing is doing a very small piece of education with the client. Okay, there are these risks involved in foreign exchange. Would you like a referral through to a currency specialist? And for many people listening, they will have direct access to smart currency via the 27tec integration. So it's really just about getting those two things. And then obviously there's all the advantages that come off the back of that for both the client and the broker in terms of, client outcomes and ultimately commission.
Kieran, thanks so much for joining us today. It's been great to hear about how currency exchange plays such a pivotal and vital role, especially in today's home buying and commercial finance scene. So thank you so much for joining us. It's been a pleasure having you on board.
Thank you.
And don't forget, if you're using 27tec's research platform, you can enjoy a direct integration with Smart Currency Exchange, where you can provide a more complete client journey, protect your client's affordability, and provide an additional revenue stream for yourself. Thanks for watching.